Hi everyone, this is Cale Smith from Islamrod Investment Management. This is the first video broadcast from our global headquarters, otherwise known as the Dynamite Building. As I think most of you are aware by this point, the stock market has been down the past few months. Tarpon Folio has been down with it. In May, the stock market, as measured by the S&P 500 index, was down a little bit over 8%, and the Tarpon Folio was down a little bit under 9%. Although it's not quite yet the end of June as I'm recording this, it seems safe to say at this point that June will be another down month, both for the stock market and Tarpon, although not to the same extent as May. I wanted to include a video update in this particular letter to investors, really to just be able to look you in the eye or enable you to electronically look me in the eye and tell you that while I don't expect you to be happy about the decline in the portfolio, I don't want you to be worried about it either. I am on it and then some. Made a handful of changes to the companies we own lately. We also, by the time you see this, will, I suspect, own about 15 companies in the Tarpon Folio. That is a historically high number for us, and that's solely a function of the opportunities I'm seeing out there. We are fully invested. We likely will still be by the time you're viewing this. But by fully invested, I should point out that we do own shares in a couple companies that are literally trading at values less than the cash and or securities they have on their books. That's probably a pretty good indicator of how inefficient the market is in certain places lately. The market prices of these companies in particular are basically implying a negative value to the company. It's almost as if the company's burned down, you might say, the shares would be worth more, which clearly makes no sense. The point to you, though, is I do consider those holdings to also be equivalent to cash, although they have a significantly greater upside, if you will, down the road. The main reason that we are still fully invested is in a nutshell, I believe the risks of a double-dip recession are way overblown, at least at this point in time. I'm clearly objective about it, trying very hard to stay on top of all the data that's coming in, but the point being that there is a bit of an overreaction lately, almost on a daily basis, to some numbers coming out from economic reports that indicate a moderating in the growth rate of the economy, not necessarily a decline. Again, still keeping a close eye on that data. There are clearly still risks to the economy, but again, I suspect they are overblown. I will put some more thoughts to paper on this soon and pass those around or post them on the blog, at least so you can read those. But again, stocks are cheap. There are risks, but I do feel like this is a good time to be active in the market, and I have been, and then some. I will, I guess I should sort of apologize in advance for the number of trading confirmations you all will see in your accounts the last month or two. That I have been doing a lot of trades. That has been a function of a couple of things, primarily just to average down in some of our existing positions, and because we're taking new positions in some fairly thinly traded securities. By thinly traded, I mean I need to take very small bites at our ownership position in each. Otherwise, I risk moving the price of the stock around as I'm taking a position. So I would point out to you, though, as a reminder, on Folio, we're not paying anything for those trades. So you're paying no commissions to Folio or me by any means. So it's not costing you anything. But it is just a little bit more paperwork you'll notice in your filing cabinet on the Folio side. Lastly, and it's hard to really say this without sounding too salesy, but so be it. I do think, and I mentioned this to a few of you so far, I do think if you're considering investing for the long term, and by long term I'm talking years, not months, but assuming that's your scenario, I do think it's worthwhile to start thinking about coming back in the market over the next few weeks and or months. Again, there are plenty of risks to keep an eye on, but stocks are very cheap. I think the risks are overblown, and if you are a long-term investor, now would be a good time to consider it. You certainly don't have to come in all at once. You certainly don't have to come in through me. If you're thinking about an index fund or any other way, more power to you. But I guess I'm trying to underscore that things are looking cheap out there, not everywhere, in certain spots, and it could be a good time to at least consider it as you see fit. Otherwise, hang in there with me. I do think the economy eventually is going to turn, or I should say the current angst about it is going to diminish. We are sort of in a normal pattern. If you look at previous recoveries, how growth moderates but still continues, and again, keeping a close eye on things, and that's all I have. So please let me know, as usual, if you have any questions, call, email, whatever, and thanks for hanging in there with me. Happy 4th of July to you.